Canada is in the middle of a rental construction boom. It's the biggest in history. But is this a sign of real progress or a warning that we are choosing to ignore? Yes, rents are coming down. And on the surface, that looks like a win for tenants. But when we dig a little deeper, the numbers tell a very different story. The wealth gap between homeowners and renters has exploded to a new all-time high, and it's not even close. If we stay on this path, millions of Canadians may be locked out of ownership forever, stuck in a cycle of renting while paying the hidden price. With record-setting rental units under construction right now, the data in this video reveals a harsh reality. Canada isn't solving the housing crisis. It's creating a generational wealth crisis. So let's dive in and look at the numbers. Right now, we are living through a rental construction boom unlike anything Canada has ever seen before. A record 355,000 homes are currently under construction in Canada, and nearly 170,000 of those are rentals. And that number isn't just growing, it's going parabolic. In just the past 6 months, rental construction surged by 20%, and it's not slowing down. June alone saw 11,000 rental starts, tying the all-time high. In Q2, that number hit 32,000. And this is against a population growth of just 20,000 that we saw in Q1. We've now hit nearly 100,000 rental starts in a single year, nearly matching the total of all condos and single-family homes combined. This isn't just a trend, it's like a seismic shift. Look back to 2015, 10 years ago, when we were averaging 25,000 rental starts a year. Today, that number has exploded to 99,000. It's a 296% increase in just one decade. What's more, rental housing starts now account for 52% of all home type housing starts. If we go even further now, in Vancouver alone, rezoning applications for just over 4,000 rental units were submitted in just the past 90 days. That is more than the entire 3-year period from 2017 to 2019, further demonstrating how many more are in the pipeline. So it begs the question, why? Why are we building more rental homes than any time in history? One of the most glaring and obvious reasons, because nobody can afford to buy a home anymore. And when it comes to the developers that are building these types of homes, well, it's not like they're just chasing this new opportunity. After seeing returns evaporate for building homes for end users, they are shifting developments into rentals because ultimately they're kind of scrambling for survival in some cases. I created a video that does a deep dive into exactly this phenomenon. So I highly recommend you check that out if you are interested in learning more. Ultimately, what's happening is builders are focusing now on building rental units because the numbers simply don't pencil out. There's no profit to be made by building for end users in the current landscape, right? Everything is too expensive, and building for end users doesn't make fiscal sense in today's landscape. So they've pivoted to rentals because that are the only type of projects that pencil out. But now, they're becoming victims of their own success. Here's what I mean. There are now 170,000 rental units under construction, and that's nearly 7% of all existing rental housing in Canada. In British Columbia, it's even more extreme. 15% of the current rental stock is now in the pipeline. So this might look like a rental renaissance, but what if it's actually more of a warning that we are building the wrong type of future? Because this boom isn't just supply driven, it's also being caused by a new trend in declining home ownership. Just look at this trend. The home ownership rate was hovering just above 60% in 1970 and steadily increased all the way up to 2011 when it peaked at 69%. But then something changed and it's been trending downwards ever since, now sitting at 66.5% and declining. And this isn't just a Canadian issue either. Even though homes in the USA are considerably less expensive, the average price of a home today is $368,000 according to Zillow. And at the time of recording, the exchange rate was 37%. So that equates to a Canadian price of about $504,000. Compare that to the average price of a Canadian home at $691,000. Well, homes are 37% more expensive here than in the States. And here's the thing. The US just hit a record amount of renters, hitting 46 million. And the reason? Well, pretty similar to Canada. Life is becoming very expensive. Homes are more unaffordable, and the dream of home ownership is ultimately slipping away. I mean, listen to these numbers. The average age of a home buyer in the States is 56 years old. And first-time home buyers, well, they used to be 28 back in 1991. And today, that first-time homebuyer is now 38 years old. That 10-year delay, it represents more than just time. It's lost equity, lost opportunity, and lost momentum. So while rental rates are definitely dropping across the country, it may not be the win that renters think it is. And here's why I say that. The wealth gap between homeowners and renters is profound. And not only profound, it just hit a record high. The youngest homeowners typically have a net worth of at least 10 times that of renters in the same age cohort. And the gap widens to almost 30 times for those nearing retirement age. For the youngest families, where the highest income earner was under the age of 35, the median net worth of homeowners was $457,000 last year, while renters in the same age group had a median net worth of $44,000. Homeowners aged between 55 and 64, well, they experienced a net worth of $1,241,000, which is nearly 30 times the renter median of $43,000. And for those above 65, the median net worth for homeowners was $1,081,000 compared to the renter median of $72,000, according to the data. And in the USA, well, that divide is even greater. Check this out. Homeowners in the US generally have a much higher net worth than renters. The typical homeowner has a net worth 43 times greater than the typical renter, according to Realtor.com. In 2024, the median homeowner's net worth was around $430,000, while the median renter's net worth was only $10,000. The significant difference is largely due to the accumulation of home equity and the potential for property value appreciation benefits, obviously not shared by renters. And what's worse, this gap is increasing. If we look back just 6 years, homeowners were at $295,000 versus renters at $7,300, about a 40.5 time multiplier. But now, as mentioned, it's 43 times, but it goes even further than that. The Urban Institute has tracked this information going back to 1989. Check out this chart. In 2022, the median wealth gap between homeowners and renters reached almost $390,000, and the average wealth gap reached over $1,370,000. Over the past 33 years, the median wealth gap between homeowners and renters has increased by 70%, while the average wealth gap increased by more than 250%. During this period, homeowners' median and average wealth increased by almost $165,000 and $900,000 respectively. But for renters, increases over the same time were $5,800 and $56,000 respectively. It's often said that people who choose to rent over buying often do so because, of course, the rental amount is less than the mortgage amount. And ultimately, what they would choose to do is invest the gap in money into things like the stock market. And while the intention there is great, the data is saying that just simply is not playing out in real life. Quite simply, the data shows that the longer somebody rents, the greater that wealth divide becomes. Interestingly, there are also other issues that are surfacing due to this huge increase in rental construction. Let's get a quick reference here now to what's happening with rental rates, because it's important to note that during COVID, of course, rental rates exploded at an extreme rate, and ever since they have been declining. Rents have been falling on a national basis since October of 2024. According to rentals.ca, year-over-year rental rates are down 2.7% nationally, with the province of Alberta leading the trend down 6%. Rental rate declines are most noted in certain cities, which include Vancouver, down 7.1%, Toronto, down 8.4%, and Calgary, down 9.8% year over year. So what happens when you bring a ton of rental supply into a declining market? Pretty good guess that rental rates will continue to lower and vacancies will increase. So again, great news for renters in the sense that they will have more choice at better prices going forward. Thing is, with a shift in any type of marketplace, while one side benefits, typically another side does not. With lower rental rates, the mom and pop and smaller landlords, well, they're obviously going to see a reduction in their return on investment, especially those who purchased at higher valuations, right? These rising interest rates and falling rents, it's going to push them into negative cash flow. And this will result in the offloading of rental units, which will, it'll tighten up the rental market over time. Obviously, it's going to take quite a while to absorb all these new units coming online. But what it will ultimately do is then push more inventory into the resale market. Developers and builders are obviously, facing a brunt of this as well. Just like we're seeing today, developers are suffering and projects are going insolvent. And moving to rentals, from end user, it will save a few of these projects and developers. But what happens next if a builder can't make money in the rental market either? Right? As we start to flood the landscape with a ton of rental units, well, those numbers might not pencil out for them either. Job layoffs and ultimately tighter supply will be the outcome there as well. The next group to consider are REITs and rental-focused real estate funds. They will likely see stock price drops. Lower rental income affects distributions and investor confidence. Real estate investment trusts may see downward pressure on portfolio value. And this does not help people looking to retire or fund their later years, provide inheritance for the next generation when they see their ultimately net worth dropping because these funds aren't hitting the numbers they need to. Knowing all these effects, the question becomes, is this dramatic shift of building more rental units pushing the next generation into a potential hidden curse of wealth destruction? The real estate game isn't just about prices. It's about wealth, power, and freedom. And unless something changes, millions of Canadians may find themselves renting forever and paying the price for it. To wrap this up, here are 2 key questions I'd love to hear your thoughts on. If renting is the preferred choice for some people, what financial path can be offered to them to help increase their net worth? And so we can finally start finding a way to decrease that wealth gap between renters and owners. And maybe the biggest question of the video is, do you think renting is a trap or a smart move? Please post your comments below. I'd love to continue this discussion about what we can do to help minimize this wealth gap. Thank you so much for watching. I really hope you found this episode helpful. If you are thinking about buying or selling or just curious what's going on in the marketplace, reach out. I'd love to chat. No pressure, no sales pitch, just an honest conversation to hopefully help answer some of the questions that are important to you and to your family. Feel free to reach out anytime. My contact information is below. Thanks and take care.